All right, yes guys, welcome back to another video on the YouTube channel. I hope everyone is doing well. In today's video, we're gonna be doing a full trade breakdown of the ICT unicorn model. And we're also gonna be providing you a complete step-by-step guide that you can use yourself and actually start to see some profitability trading this exact same strategy. So this exact same trade that we're gonna be breaking down in today's video, we actually took this on live stream with the live trading group and we secured over 107 handles on the NASDAQ. So a lot of people got funded, a lot of people got paid out from this trade alone. Now, very quickly, before we do get into today's video, I just want to show you these chats for transparency reasons. So you guys know what I am saying is actually true. So as you can see here on the 18th of September, 2025, okay, I send the alert long NQ at 24655.75, which is around this level here. Okay, so I give you your stop loss, TP1, final TP, etc. If I move my stops, I'm also telling you guys to move your stops. Okay, as you can see here, TP1 got smashed. So once this internal buy side got taken, we obviously took some of our position off, trailed our stops further, and of course, final TP smashed for 107 handles at this external buy side level here. If you guys are interested in joining the community, make sure to check out all of the links in the description below. I go live literally every single morning at 9:30 a.m. New York time. You can come, tune in, watch me trade live, listen to my thought process when I'm actually inside of a live trade. I go over my daily bias literally every single day as well, what I'm looking out for, what I'm expecting, is there any high impact news, etc, etc. Now, just quickly before we do get into the video, let me just show you the Discord. This is what you'll be getting when you do join, right? You obviously have the welcome channel. There's a few rules as well that you need to agree to follow. Very simple stuff, like obviously being respectful to other members. Now we have a mentorship section covering literally all of the trading models that I use. I do only trade two models, which is the silver bullet and the unicorn. Now I do also cover a few other gems in there, which I don't really share publicly. So you get access to the course videos. You also get access to an A+ checklist criteria. You get access to a risk management channel and also a psychology channel. So that is the mentorship section. Obviously, we have the live trading room, which is the main value of this Discord. Everyone loves to come watch me trade live and, you know, copy the trades. I don't recommend that you do that. I do recommend that you come in here and actually learn to trade yourself and use me as a confluence rather than just copying my executions. But we do have people in here that do that and they make money from that, which is totally fine. But in the long run, I want you guys to actually learn to trade yourself properly, which is the whole goal of these live streams, right? So that's totally up to you what you do with that. Now, we have the signals chat as well. So in case you can't tune in into live streams, don't worry, you'll still be alerted if I enter a position. Daily analysis channel. So every single day, I will send in all of the levels that I'm monitoring on NASDAQ. And then we also have a weekly results channel. So every single week, we break down the trades that we took, whether it was a loss or a win. We're gonna be including all of that. So obviously this week, we secured 92 handles, which is actually very good. We took one loss on Monday, 15 handles. Tuesday, no trades. Wednesday, no trades. And obviously Thursday was just absolute bang of a trade for 107 handles. And Friday, we took one break even. So overall, very profitable week. Not many opportunities, but as soon as we get an opportunity, A+ setup, boom, we execute and we're profitable. So you only really need one trade a week to be profitable, guys. You don't need to be catching 5, 10 trades a day and all these massive moves. You only need one trade, that's it. And then of course you have the community section and a bunch of other stuff, which I won't be covering because we'll be here all day, right? So you guys can have a look at that once you do actually gain access. Now, very quickly, I just want to show you a lot the wins and results channel because this is absolutely disgusting. So boom, right? As soon as I come in, a guy's been paid out 2.5K USD from Top Step. He says, new here, but I got my recent payout following your strategy, right? He followed the model, boom, he got paid out. Another guy, literally another guy, first payout, boys, I love you, ICT Kazakh, right? 2.5K, it's been paid out. Obviously, I responded, I said, let's go, bro. That's amazing, I love to see you lot succeed. And it goes on, boys. It really does go on forever. I could be scrolling here all day. But yeah, the wins just keep on going. I mean, you guys can see for yourself, right? 2 combines passed. The people inside of this community are absolutely smashing it. And most of these people as well, they're actually taking their own trades, just following the strategy and model that I've actually provided them. They're not even copying me, right? Which is the absolute crazy thing about it. So I'll leave you lot with that, guys. If you are serious about joining and getting your trading to the next level, make sure to check out all the links in the description. But other than that, let's jump straight into today's video. All right, so getting into the breakdown, right? What do I like to do when I first approach price? Now, I always like to start on the daily time frame. That is the most significant time frame. That is where you're going to find out what is your bias, what is your draw on liquidity, etc., etc. So looking at the daily time frame, right, what does it look like? So Thursday is the day that we actually took the trade. So try imagine this candle, it has not yet been closed. So this at the time did not actually take this swing high to the left of it, meaning we weren't yet at all-time highs, and we were actually just sitting just below that high, somewhere around here. Okay, so try ignore this candle because it actually wasn't there when we were trading Thursday, right? It has not closed yet. Pay more attention to this inefficiency here. So as you can see, right, we're resting inside of a daily bullish imbalance. Now, what does that tell you? Whenever we're inside of a daily bullish gap, we're going to be bullish, right? Because price is most likely going to respect this gap and push higher towards that next swing high, which will be your draw on liquidity. So I've done many videos on this as well, guys, on my channel, explaining daily bias. So go ahead if you haven't already, watch that. Now, in short, right, if we're in a bearish daily gap, you're going to be bearish. If we're in a bullish daily gap, you're going to be bullish. So as you can see here, price came down, it wicked all the way down, and the body of the candle actually closed inside of the inefficiency, meaning it's respected that gap. Now, if the body would have closed outside of the gap and disrespected it, obviously we would have a bearish bias because we've just inversed that bullish gap. Now, that is not the case. We've respected that gap. So what is the next draw on liquidity? It's going to be that swing high resting there. Daily time frame looks bullish. What do I do after that? I'd like to jump down into the 4-hour time frame. So figure out your bias on the daily time frame. Then you jump down into the 4-hour. Then you jump down into the 1 hour and the 15-minute and so on. Okay, a top-down analysis. So the 4-hour, what can we see? Again, we're inside of a 4-hour bullish imbalance, which again, price is respecting. The bodies of the candles are closing inside of that inefficiency. So the daily's bullish, the 4 hours bullish, right? We also have a 4-hour order block resting with that imbalance as well, which is another confluence. Another 4-hour gap here as well that price is respecting. Now I'm going to be jumping into the 1-hour time frame to see if price matches. Amazing stuff. Again, the 1-hour time frame looks very bullish, right? We have a 1-hour gap here and also another 1-hour gap here that price is respecting. Again, look at the wicks, guys. So the wicks do the damage, the body of the candle actually tells the story. So the wicks have come down, done a little bit of damage. However, the body is actually closed inside of the fair value gap, meaning it's been respected, meaning it's bullish. So what can we see so far? The daily's bullish, the 4 hours bullish, the 1 hour is bullish. So 3 time frames are all bullish. That's when you're going to get the best and highest probable trade setups, when all of the time frames align, meaning the higher time frames bullish and also the lower time frames bullish. So let's quickly see if the 15-minute is bullish as well. Okay, so the 15-minute as of the time, right? So let's skip to obviously 9:45, which is before the macro. If we just remove all of these drawings and actually mark out our liquidity levels. So we are inside of Thursday. What I like to do on the 15-minute time frame is I like to mark out my previous daily lows and my previous daily highs. So obviously Wednesday is the previous day. Now you need to find the lowest low and the highest high that happened inside of Wednesday if you're in Thursday, right? So obviously you can see here, Wednesday, this was the lowest low created. So this will be our previous daily low. Do we have a previous daily high? No, we do not. Okay, we've actually already taken the previous daily high. So I won't be marking that out. Now, after I mark those levels out, I like to mark out my session liquidity. So things like Asia lows, London lows, stuff like that, right? So do we have any London highs? No, we do not. Okay, it's already been swept. Okay, so we won't be marking it out. Do we have London lows? Yes, we do. London, if you don't really know, is from 2 a.m. to 5 a.m. New York time. So again, find the lowest low and the highest high created in that session. That will be your session liquidity levels. Okay, so this right here is going to be London lows. Asia session is from 8 p.m. to midnight New York time again. So as you can see here, 8:15, that is the lowest low created inside of Asia session. So that will be our Asia lows. And then we have some external buy side resting up here. We can mark that out as well. Okay, now, so we've covered literally everything that we need to cover. We've marked out all of our levels. We've figured out our bias, okay? Now we jump down into the 1 minute time frame and start looking for the model. Now, before we jump into the model, we need to understand the checklist that we're following. Okay, so just to keep things simple, I've written out 7 steps here, which are the most important steps that you should be following when trading this strategy. So the number one thing that you're looking for when you're trading the unicorn model is of course going to be a sweep of liquidity. What is a sweep of liquidity? Right, any 15-minute swing low or swing high, that's going to be a form of sweep of liquidity, meaning we've swept sell side or we swept buy side. Now, even better, if we sweep session liquidity, meaning, for example, we swept London lows or Asia lows, Asia highs, London highs, etc., that again is going to count as a sweep of liquidity. So once you've seen that, you need to see a displacement, meaning price is displacing either higher or lower. If we've just swept sell side, we want to see a displacement higher. If we swept buy side, we want to see a displacement lower. Okay. Now with a displacement will come a market structure shift, meaning we break above a swing high or a swing low. Very important. If we have not done that, there's been no market structure shift, there's no trade. Okay. Now, once we've done all of that, we've displaced, we've had a market structure shift, we've swept liquidity, what usually will come after that is a fair value gap with that breaker block, okay, which is your entry model. Okay, so once you see that, you get a entry, obviously you have your stop loss in place as well, and then you simply just target the opposing liquidity, right? So these are 7 steps. If you haven't already, make sure to screenshot that and just save it for later. But let's jump into the 1 minute time frame and actually break this trade down so you guys can understand. So as you can see here, right, price has come down and it has actually not swept London lows yet, which some of you might find confusing. Now, when you're trading NASDAQ, you have to be trading the correlating asset, which is ES or S&P 500. You have to be looking at the asset on the right side of your screen. So if you guys pay attention to my live streams that I post on YouTube, you can see, if you go back to that video, you can see ES on the right side of my screen, and I'm constantly watching what is ES doing when I'm trading NASDAQ. Okay, so at the time, ES had actually come down, it had swept London lows, and it had also swept Asia lows, okay? And NASDAQ hasn't done that, meaning we have a bullish SMT. Now that is very, very good because that can add to our trade, right? You can use that as an extra confidence to the trade. So whenever you're trading NASDAQ and you're going long, you want the bullish SMT to be on NASDAQ, meaning NASDAQ is the stronger asset, right? It's a stronger pair. So the fact that NASDAQ has not swept London or Asia, but ES has, that's going to add to our trade. So even better, right? Now, unfortunately, I can't actually show you on TradingView that ES had swept London and Asia because I'm in replay mode, and for some reason you can't look at 2 assets when you're in replay mode, which is annoying. But if you do actually go back to the live streams that I post on YouTube, this exact trade, you will see that it had swept London and Asia, right, on ES. So anyway, that's number 1 checked off, okay? We've swept liquidity. We've swept London, we've swept Asia, we've swept a 15-minute swing low, okay? We've swept sell-side liquidity. So after we see a sweep of liquidity, what are you looking for next? You're looking for a displacement higher, right? Now, what comes with a displacement higher? Will usually come a market structure shift. So you can see here, we have a swing high resting just there, which price has obviously come up, displaced through, and closed above, and has broken through that swing high. So we've had displacement, we've had a market structure shift. What are we waiting for next? We're waiting for our entry model, which is the unicorn model. This is your breaker block here, and this is your fair value gap here. Okay, so many of you may already know what a fair value gap is. Some of you might not know what a breaker block is. Now, I'll explain that in just 1 minute. All a breaker block is, right, is the highest up close candle in a bullish scenario inside of this price leg. So we come down, we get a swing low that is created, we get a swing high, then we get a lower low breaking through the original swing low. So let's say traders are going long here, they're trying to get an early entry, they will get stopped out before the real move occurs. Okay, so after you get that lower low, expect a higher high, which is the expansion leg, right? That displacement higher, and that is the last phase of the breaker block. Okay, then your breaker block is created. The highest up close candle in this price leg here is going to be your breaker. Now, since we have 2 consecutive up close candles, you're going to be marking out both of these candles here. Okay, to keep things simple, you can just simply mark out 1 candle here, which is the highest up close candle, including the wick. It will be that candle there. Now, with the unicorn model, you need to see a breaker block with a fair value gap. You can't have one missing. If one is missing, that's not a unicorn model. It's a different model you're trading. you need to see both. When you see both, they'll usually be overlapping each other. So notice how the breaker block is within the same range or level as the fair value gap. It's overlapping each other, right? It's in the same area. That is exactly what you want to see. That is a true unicorn. Now, what are the next steps on your entry criteria, right? You want to have a long position at the fair value gap or the breaker block, whichever one gives you a valid stop loss. That's the one you'll be entering on. So in this case, it's going to be the fair value gap, and they're actually at this pretty much the same level. So it really doesn't matter. There are some cases where the breaker block will be higher or the fair value gap will be lower, for example, and only in that case you enter off a different PD array, right? But usually you're going to be entering off the fair value gap. Now, stop loss, you're not risking more than 30 handles. That's the maximum amount you're going to be risking, and you're going to be covering all of the imbalances, right? So notice how there's another imbalance resting here. It's being covered with the stop loss, okay? Preferably, you want to have your stop loss at a swing low or the displacement candles low, which we do have. Don't be risking more than 30, because at that point, you're just over leveraged. Now, the last step on the criteria is just to target the opposing liquidity. So what is the opposing liquidity? This high here and this high here. So this high here is going to count as internal buy side liquidity. Why is it internal? Because it's resting inside of the range. This high here is going to be classified as external because it's resting outside of the range. Okay, so you're going to be taking partials at internal and you're going to be closing your full position at external. So we've met all of the entry criteria I've listed out. Everything is aligning. There's literally an A+ textbook model, right? Doesn't get better than this, guys. It really does not get better than this. Now, we simply want to wait for an entry. So notice as well, guys, there is another fair value gap here. So a lot of people, when I was trading this at the time, they were saying, Ben, you know, why are you not entering at this gap here? Why are you entering down here? Because if I enter at this gap here, first of all, my stop loss is around 100 handles. It doesn't make sense. And my first TP is here. So the risk to reward doesn't make sense. It's a negative RR. And that wouldn't be really trading the unicorn model, because the unicorn model, you want to be entering in this area where the breaker block and fair value gap are overlapping each other. That's where you want to enter. You don't be entering on a fair value gap that's 50 handles higher, okay? So we patiently waited for an entry here. And I told myself on stream as well, I said, guys, if we don't get an entry here, we simply won't take this trade and we'll simply just sit out. And if it does play out, so be it, right? We're being patient, we're being very strict, very disciplined. We want an entry here, not here. So let's see what happens here. Price comes down, it gives us an entry. Our patience pays off, okay? If you would have entered here and had a stop loss, I don't know, in this gap, you would have been stopped out, and then price would have played out without you, which is way worse than just staying patient. Stay patient and actually wait for price to give you the entry that you want, okay? So that's what we done. Price came down, we entered long on the fair value gap. Stop loss was below this imbalance here, and we wait for price to take that high. So as soon as price broke above this swing high here, I trail my stops to the swing low, resting inside that gap, reducing risk, and obviously TP1 had been smashed, so we've taken something off our position, and we've also reduced our risk. Now we're literally holding the remaining of the contracts towards a final TP, which is at external level. So let's see how price plays out here. Boom, final TP would have been smashed. 107 handles secured. Okay, literally textbook setup, textbook trade. And it's really as simple as that, guys. Okay, you see the model play out on your chart, you simply take it. There's nothing to think about when the model presents itself. As soon as you see it, that's it. You press the button, that is your job as a trader to execute. Okay, and price has played out absolutely beautifully. So I'll leave it with that, guys. I hope you lot enjoyed. I hope you lot learned something from this trade breakdown. If you did, make sure to leave a comment saying I learned something. That way I know you stuck towards the end of the video. And lastly, of course, before we end off today's video, if you are someone that's really looking to take your trading to the next level and you've been struggling for a long time now, you've been through all of the free content I provided you on YouTube. You've also been through all of the free content that ICT has provided on his channel, and you're still not seeing results, you're still struggling, and you're looking for a mentor to guide you literally every single step of the way, pretty much a one-on-one session with me every single day on live stream, breaking down every single loss, every single win, the reasoning and logic behind every single trade, and you actually want to learn the high income skill of trading, then make sure to check out all of the links in the description below. Join the live trading community, secure your seat, and start seeing results. But yeah, other than that, guys, leave a like, leave a comment, share and subscribe, and I'll see you lot in the next one. Take it easy.